Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta as always, and the market has really seen a good recovery, right? Over 19,400 right now, so we're just around 20 points in the red. So I mean, of course, it is still a down day, but considering the kind of fall that we had soon after the open, this is quite a good recovery that has come through. And across the board, you have the mid-cap index also, which is, for now just trading with a cut of around 0.3%, and the banks have also recovered. So that is down around 150 points right now. The advanced decline is still negative because you are still seeing some pressure in the broader markets. But, this is, Ekta, whichever way you look at it, quite a recovery from the lows.
Hi Pavitra, yes absolutely, and a lot of volume action as well, considering that even though tomorrow is a holiday, we are seeing quite a lot of action in specific stocks. Just want to talk about a couple of nifty stocks. LTI Mindtree is now one of your top gainers on the nifty, so it's up around 1.4%. Infosys is seeing buying as well, so Infosys is up around 1% at this point in time. HUL, Reliance Industries, all these stocks are doing well, so there is buying across the board, and there have been losses which have been cut in specific stocks such as State Bank of India, which has recovered a little bit from the day's low, but a couple of these metal stocks, a couple of these result reactions such as Apollo Hospitals and the Adani stocks continue to trade under pressure. But nonetheless, we do have with us this afternoon Shahina Mukadam, who is an independent market analyst, and Ruchit Jain, who is joining in on the technicals. Ruchit as well as Shahina, welcome to the show. But let's get going in terms of the first question that we have. We have Gaurav Agarwal, who writes to us from Noida. He holds 15 shares of Bajaj Finance, which he's bought at 7195, and 25 shares of Bajaj Finserv at 1566 since a year and a half. He says that prices have corrected after the quarterly results. He's a medium-term investor, wants to know what to do and whether he should remain invested or sell at current levels. Well, Shahina, how would you approach Bajaj Finance, Bajaj Finserv? There are fears of competition also seeping into the fundamentals of those companies. But do you think it's just a portfolio stock? You buy it, forget it, and look at it maybe a couple of years later?
Well, if you had asked me the same question maybe a year back or something, I would have said yes. But Ekta, you've hit the nail on the head. Basically, the competition likely to come in is very aggressive and large competitors. You have Jio. In fact, you have Bajaj Auto itself who's saying that, they're setting up an NBFC. So competition on one hand is, increasing. On the second hand, you've seen valuations are pretty expensive. At 6.5 times, it's quite expensive. And the performance of this stock also affects, of course, Bajaj Finserv, where it holds about 52% of equity. So if you take both the stocks as a group, I think there's more competition. The growth also, well, they have done pretty well in this quarter, and even for FY24, numbers of growth they're talking of are about 29-30%. But if you see the longer term, they have brought down their growth guidance. I think they're expecting more like 25% growth, which is not bad by itself, but compared to the valuation, it's on the higher side. So I would say, one can switch. I don't think it's the best stock in NBFC sector to hold as of now.
Okay, got that. Let's also get a technical view on both of these stocks on Bajaj Finserv and Finance. Ruchit, how are both of these looking on the charts, and what would you suggest to this caller? Do you think, should remain invested? Would you suggest perhaps getting out at this time? What do you think is a good way to play these?
Hi, very good afternoon to both of you. Well, I think that the price-wise corrective phase we have already seen on the short-term charts from the recent swing highs. But that has not changed the mid to long-term structure where we have seen a high top, high bottom structure on both monthly as well as the weekly charts. So I think at current levels, no, I'm not expecting any significant price-wise correction from here on. So a near-term pullback move, maybe next 2 to 3 months could be seen in both Bajaj Finance as well as Bajaj Finserv. Bajaj Finserv specifically, we are expecting levels around 1600, 1650 could be there. In this pullback move, I think, which could be a good opportunity if he wants to lighten a position. So at current levels, I would advise to continue to hold on to the stocks. But yes, any pullback move towards that 1600, 1650 range, that could be levels where if he wants, then he can lighten up the positions.
Okay, got that. That is the call coming in on both of these stocks, Bajaj Finance and Finserv. But the next query comes in from Avinash Kumar, who writes in from New Delhi. He holds 25 shares of MMM bought at 1500, so making some money here. And also 50 shares of Laurus Labs, which he bought at 405. So he is seeing a bit of a cut on Laurus Lab. He says he's a short-term investor and wants to ask if he can hold the stocks for another 3 months or whether he should sell at current levels. Shahina, coming to you on both of these. On M&M, you know, the management has offered some clarity on the entire RBL investment. So the stock is, you know, at least recovered a part of the pressure that we saw over there. And Loris is significantly, you know, lower than the highs that we've seen. But after its results, it's rallied a decent bit. So what would you recommend on both of these?
Well, M&M, I would say that they have got good plans for EV, and there is some explanation, as you said, that has come up on the investments that they have made in RBL Bank. I would continue holding for the medium to longer term also. And Loris Labs, I would suggest an exit. Basically, the numbers in Q1 were very disappointing. And while the company is putting up capacities to expand its business, I think the dependence on ARVs is still high, which is a low margin business. And the next couple of quarters I would say that numbers are likely to continue to disappoint. And valuations, are, I think, on the higher side for the numbers that they're reporting. So for the short to medium term, I would exit.
Okay, short to medium term you would exit. Just talking about the pharmaceutical space, we have Solara Active Pharma, which is an API company. It's come out with its numbers. Margins have improved on a year-on-year basis, but the net loss continues for the company. So that net loss is probably weighing down. Net loss of around 19.5 crores versus a loss of 16.4 crores. So it's expanded on a year-on-year basis. But there has been some amount of improvement in terms of the margins as well as the revenue. But let's get another query. This time we have Jayesh Desai, who's calling in from Surat. He's made investments in Infosys. Hi, Jayesh.
Hi.
Hi. Welcome to the show. Tell us your query.
Actually, I am holding some 10 to 15 Infosys, and it was purchased before 1.5 years before. My query is that should I continue it or change it in some other stock?
Okay, all right. How long are you comfortable with holding Infosys for?
Pardon?
How long are you comfortable with holding the stock for? Are you a short-term investor, maybe a couple of weeks, months, medium-term investor?
No, I can hold it for long.
Okay, you can hold it for long. Shahina, in that context, then what would you recommend? Because, you know, the key highlight in this quarter's numbers for Infosys and probably for the entire IT space was the revenue guidance, which was declined downwards. So the street is going to be watching for Q-on-Q recovery, the sort of trends that we could see in Infosys going forward. What would you recommend as a long-term shareholder in Infosys? Do you think it'll make money?
Well, I think it will, but I think next couple of quarters is likely to be challenging and we need to review. Now, if he wants to review whether the investor would like to switch to TCS for the longer term, and which of the two, in my view, is the safer one, I would go with the TCS. They have shown us that they will manage the ups and downs and they are increasing their revenue from digital space. I would think it's more expensive than Infosys. And of course, Infosys is seeing the short-term rally, but it has underperformed if you see last 6 months versus, TCS and most of the other IT stocks. So I would take this opportunity and switch to TCS.
Okay, switch to TCS. Ruchit, what do you think about this one? Would you continue to hold on to Infosys? How's it looking on the charts? Or would you also recommend perhaps another stock from this space?
No, I would continue to recommend him to hold the stock. Primarily, I think the worst has been factored in the current market price. If you look at last couple of quarters, we have seen gap down opening on the post the results announcement. But after that, the stock has seen a gradual recovery from their lows. Maybe another quarter, the stock won't give much returns. Investors would like to see, next quarterly results as well. But I think the way the recovery, we are witnessing recovery post that result day. So I think the downside seems to be very limited from the stock. So since it's a long-term investors, I would have deferred if he would have asked for short-term trading. But for long-term, I think the price-wise corrective phase is done. You can expect some time-wise correction in the stock for another quarter. But I think the downside seems to be very limited from here on. So he should continue to hold on to this name from at least 2 to 3 quarters perspective.
Okay, that is the call on Infosys. Let's also try to get in another query now. This is Gurbinder Singh, who writes to us from Chandigarh. Now, he holds 1,000 shares of Reliance Power, which he bought at 15.83. He says he's a long-term investor and wants to know the future prospects of his investments. Ruchit, what about this one?
So I would recommend to continue to hold on for now, but no, don't expect any major up move from current levels. If the stock gives a pullback move towards 20-21 rupees, so ideally those would be good levels to take an exit from the stock. So it has been an underperformer these years, from the space as well, from the same sector as well. But off late the volumes have been good. So any pullback move towards 21 rupees, then I think it should be a good opportunity to take an exit from the stock.
Okay, all right. Those are the views coming in. Well, we do have Workhorse numbers where they have recorded a positive margin. So 2.5% in terms of margins is what they've recorded. The net loss, however, has expanded. We'll take a short break, but we'll answer more queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We have with us Shahina Mukadam and Ruchit Jain to answer all of your stock queries this afternoon. Let's get to another question. We have Manishankar M, who writes to us from Chennai, holds 1,400 shares of Adani Power at 197, long-term investor, and wants to know what to do, whether he should hold or sell this particular counter. Shahina, before we ask you about the fundamental view on this particular stock, I wanted Ruchit's view on the technicals and whether he sees how should one probably approach a stock such as Adani Power as well as maybe the Adani Group stocks technically.
So all these names are quite high beta names. We know that rather than moving on any type of technical structure, what we are witnessing is more news-based moves is happening in Adani Group stocks. So ideally, we can take a stock-specific approach within the group as well, but do not forget to keep some stop losses in these names, because with high beta names comes higher volatility, and if the volatility continues to be in the higher side, then I think the risk would be much higher in these stocks. So continue to hold Adani Power for now, because the structure technically has turned positive off late. In the recent correction, the stock has managed to take support around its 100-day exponential moving average, which is now placed around 250. So if he has positional perspective, then continue to hold, but keep a strict stop loss below 250, and on the high side can expect target somewhere in the range of 320 to 330.
Okay, that is the technical view on this one. Shahina, how would you look at a stock like this? Like we were mentioning, it's largely, of course, based on news flow. But what would you recommend to someone who has gotten into the stock?
Yeah, Pavitra, I totally agree with the technical view. Basically, the first quarter numbers, the turnover was lower, but the profits have shot up because they had an, profit of about 6,500.
Okay, I think we've lost Shahina there, but in any case, we do have the July trade data on your screen, so do watch out for that. Exports are down around 16% to $32.25 billion, but imports have also contracted on a year-on-year basis in double digits to the same amount. Well, we do have Rajiv Kumar, who writes to us now from New Delhi. He holds 4,500 shares of Engineers India, which he's bought at around 100 odd rupees. He's a medium-term investor, wants to know what to do, what the prospects of his investment is for a one-year view, considering that he's already sitting on a profit. Ruchit, what would you recommend?
So after a long underperformance, many PSUs names have witnessed a good price volume action in last 3 or 4 months. And I think this theme which have started in last 3 months is likely to continue going ahead as well until we see any kind of reversals happening in most of the PSU names. So broader structure for Engineers India is still positive. Good volumes have been seen recently. And even if you look at some of the minor corrective phases which are there, then the volumes are not high when prices are going down. But on dips, always we witness a good buying interest in this stock. So I think this stock is likely to head higher towards 180 to 200 range in short to medium term. So my recommendation would be to continue to hold on and ride this trend around 180 to 200. I think that would be the range where partial profit booking could be considered.
Okay, this one has had quite the ride, right? I mean, this year itself is up over 80%. But Shahina, coming to you on this one, how would you look at a stock like Engineers India?
The valuations are very attractive. It's just about 8 times EV by EBITDA. And while revenues are more or less stagnant, they've got a very strong order book position, including the latest one they got from ONGC. So I would continue holding this stock with a stop loss.
Okay, all right. So that's on Engineers India. Samir Shah writes to us from Bhopal with an investment question. He wants to purchase 75 shares of Workhorse for about 3 to 5 years. He wants to know what the stock potential and suggestions for other pharmaceutical stocks would be. Well, China, we were just discussing the Workhorse numbers. It's just been all about volatility for that particular stock, and they really haven't recovered from the US business, which was plagued by regulatory issues since 2013. Do you think things could get better for the best for Workhorse from here on? Is it a stock one should probably look at for a longer term holding? And if not, any alternatives within the pharmaceutical space?
See, Ekta, this stock had done pretty well last year after they had announced a restructuring of the US business. So, I mean, whoever had the stock sort of saw some recovery. Having said that, I wouldn't be invested in Workhorse. It's a loss-making company. Also, I think, it's really not been a performer over the longer term. I think there are a lot of other pharma companies which are there, which offer you decent return over a stable return over a medium to longer term. So I think pharma, you should be invested in those stocks, more like a Cipla, Urbindo, Dr. Reddy. I mean, why invest in Workhorse? I wouldn't be invested.
Okay, not looking at Workhorse. Ruchit, would you agree with that view that there are other pharma stocks that you would prefer over this one, over Workhorse?
Yes, definitely. A very high beta name, whenever price corrects, the correction is too sharp to take an exit as well. So I think better to avoid such high beta names. And within the similar sector, I think Apollo Hospitals could be a better bet because the stock prices have also seen some correction from the recent highs. Stock is trading around its medium-term support, which is in the range of 46 to 4800 range. So the downside seems to be very limited from here. And even this entire hospital related stocks, if show an up move in the next 1 year or so, so I think the leadership and outperformance could come from Apollo Hospitals. So better to go with Apollo Hospitals rather than Workhorse.
Okay, Apollo Hospitals is your pick on this one. Let's also get in our next query. We have Lakshmi who writes in from Kochi. She holds 3,000 shares of Heritage Foods, which she bought at 155, and also 2,000 shares of Piramal Pharma, which she bought at 91. She's a medium-term investor only and wants to know whether she should book profits or stay invested in both of these names. Ruchit, coming to you on both of these, what do you think of Heritage Foods? I mean, it has picked up a little bit in the past, in the past few months, but how would you look at this one? And also on Piramal Pharma.
So the price up moves have been supported by good volumes in Heritage Foods. So I think that's the main reason why we have seen a rally in the stock. And due to that reason, I would recommend to continue to hold on. But don't forget that these mid-cap names, if show correction, then the correction could be sharper as well because of this recent up move also has been very sharp. So keep a stop loss below 235, which is a medium-term support for the stock. So 235 would be the stop loss for Heritage Foods. And Piramal Pharma also, I think a gradual recovery has been seen from the lower levels, but the volume pickup has not been that great in Piramal Pharma compared to what we have seen in many other pharma names in this last 2 or 3 months. So I think better keep a sell on rise strategy in the stock. Any pullback move towards 108, 110 should be a good idea to take an exit from the stock and look for better opportunities somewhere else within the same sector.
Okay, all right. That's on Piramal Pharma. The stock has corrected quite significantly from the time that it listed in October of last year. Well, on that note, we have to also wrap up on the show with the news that there has been a recovery for the markets. The Nifty is almost going to break into the green as we speak. And we have the mid-cap index, which is still got some way to go along with the Bank Nifty. Both of those indices are down over 80 points at this point in time each. Well, but do remember to email us your queries and we will be addressing them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.